Hello friends, today bulls overperformed for Bank Nifty if we compare that with Nifty. Bulls managed over 2 percentage gains over its previous close for Bank Nifty. If we study at present, then different chart structures, or we can say that different patterns are in formation. If we consider this red trend line, then definitely at present bulls have managed a breakout. But if at all we see and consider the structure, then somehow with some leverage and some deviation from textbook pattern, we can see that a bearish Wolfe wave is in formation. Rather than considering this structure, which we are able to see comprising of two green lines and one blue line, more convincing structure that is visible at present is something different. If we try to plot that part, then we can see that somehow this is a proper structure that we can expect for a formation. If that is a case, then we can consider that overall somewhat more upside is due for Bank Nifty. If we consider the levels wise, then levels that we can expect for more upside is still about 400 to 700 points from the last close. Levels come near to 39,900 to 40,000 as a whole. If we ignore this entire trend line structure and not consider any Wolfe Wave projection or Wolfe Wave formation alike, then simplest way that we can check out resistance at present is by Fibonacci. If we consider Fibonacci tool, then 100% reversal is done from the previous swing, but still if we try to plot different Fibonacci ratios, then we can find out upside resistance. For that, we can change our ratios on a reverse side so that we can find what can be the probable resistance. As per this structure, again somehow we can expect 39,800 to act as a resistance before any major downside. Before that, 39,448, we can make a round of value 39,450 plus or minus 20 points on the both the side may act as a resistance. So we can consider that still upside move is due. To take a confirmation from the same, we can use Bollinger Band default values, then somewhat breakout can be considered, but this breakout may get failed as the prior condition for the breakout should be that overall structure should be in a tight range, whereas we are able to see that moves are on the both the side with good ATR values or good average true range or true range values as a whole. So somehow Bollinger Band may not give us a true picture. If we plot RSI in the current structure, with the default inputs, then still overbought levels are yet to come. The only concern at present is a bit of a mismatch between RSI values and previous swing of underlying values. Small case of divergence can be seen at present, which needs to be confirmed in next 1 or 2 trading sessions. If we go for hourly chart, then hourly chart definitely RSI is at overbought zone, but somehow adjustments is taking a place, so we are not going to consider overall RSI as a true indicator or oscillator to predict next momentum or next move. If you go on a 15 minutes time frame, then again RSI adjustment is taking a place, which will not give us a true and fair picture. If we plot long term moving averages 100 and 200 SMA, then yesterday's low acted as a strong support, as it was at a 200 SMA on a 15 minutes time frame. A good move is seen after moving average crossover and the move is more than 1500 points, which is again very good. If we consider hourly chart for a moving average crossover, then picture is not that clear or convincing as the case may be because of volatility seen in last 2-3 trading sessions. So somehow we will not follow 1 hour chart with the two long term moving averages 100 and 200. If we try to check option chain data, then on option chain we can see hefty additions done on 39,000 put option with a hefty addition of 80,000 or near about 80,000 contracts, and overall OI stands at 87,000 contracts, which may act as a strong support. Not considering any strike price below that, the reason being highest addition and closing at near to higher levels towards the end is giving a hint of probable more upside, except the case that we may see a divergence probably in next 1 or 2 trading session. 40,000 without a shadow of doubt is going to act as a resistance, and the only good part that we are able to see with respect to the help or which may come to the aid of bulls is that 39,500 call contract undergone liquidation in the last trading session, which says that somehow they are trying to take a exit from their writing position and do not want to take a risk on the day of expiry. If we consider max pain data, then max pain is at 39,100. That means again we are having a strong support. PCR, if we consider OI basis and volume basis, is at comfort zone, so should be ignored as a whole. Now, as we have already mentioned on our front page profile for 39,000 put contract, that what can be the panic values, let us try to restudy the same on the chart. We had mentioned that 39,000 put contract or a put writers may come into panic only if it goes above 250, when it was trading near to 160 levels or so. Now the last close is near to 90 levels, and somehow we follow our stand that still 250 is going to act as a strong resistance, and somehow this can be considered as a writer's panic level as well. But the important part that we see is that open and high for this particular strike price was same, and we closed almost near to the day's low. So the simplest way to make the things easy is those who have sold this particular option towards the close may try to keep a SL in 180 to 200 levels because if at all by any chance if we see the volatility, then 250 may go into the flashes and this particular strike may witness a level up to 400 as well. But for that, first of all, 200 should be cleared convincingly, and then only we can see some panic in 39,000 put contract writers front. Else there are very high chances that not only 39,000 but 39,500 put contract also may end up into a zero. Last close for 39,500 put contract is near to 300 rupees. It has made a bearish structure as a whole. We can see that overall prices are coming down only. And if we see lifetime chart for this particular strike, then it is at a life low levels, and accordingly if we check, there are very high chances that it may end up into a zero. Just to have a proper understanding and to find out the panic level, we will try to find out a swings for this particular contract, and if we do so, then a panic level comes at a very high level of 881 or near about levels. Practically that is really very far and one should ignore that as a whole. So to make the things easy, what we can do is we can study only intraday chart for this particular strike and can find out panic levels accordingly. If we see or try to connect highs and low of this particular strike, then in between a midway at 555 is a panic level for this strike price writers. In fact, at first 410 and near to 500 should be the levels that one should keep an eye on and which should be considered as a panic level exit for the writers. Being an expiry trading session and throughout the week we have seen a good zigzag or a volatile moves as a whole. We request you to manage the risk, and if at all you want to save your hard earned money, try to take a trade in next series, as that will save your hard earned money rather than getting SL trigger, stop loss trigger and capital get erode in case of unnecessary zigzag moves or volatile moves. We hope this video is going to help you to prepare your trade and trade accordingly. See you soon with another video. Till then, stay safe, take care, bye bye.